Good morning, Armor Insiders. Welcome to the morning meeting of the virtual hedge fund we like to call Armor Investing. Thanks for joining me and starting your day this way. We're going to go over big picture, macro, stock market direction, what's been happening that's driven us to raise a little bit of cash in here and get ready to trade around the core. Then we're going to drop down into our highlighted group of the day are the Armor dividend stocks. And I'm going to share with you step by step what puts a possible dividend stock on our whiteboard, and then when do we start accumulating the shares. And I'll go over it with an example today of Pfizer, the chart you just saw. Then, of course, we'll wrap up, as always, with a discussion about the Armor carry portfolio. So let's dive into the third portfolio that I want to talk to you about, and that is our dividend portfolio. This is the highlighted portfolio of today's discussion. We follow a completely different path when it comes to building a position in a dividend stock. Okay, this is far and away our largest exposure, and we're long term on the pipelines. Okay, we're long term here. We've owned it for a long time. What we look to do in our dividend portfolio is buy weakness, not strength. So in our other portfolios, our algos are geared towards weakness, but also buying the move higher. So we look for weakness. When it breaks out, we start putting money to work. Dividends are different. We build a whiteboard of former blue chip companies. And maybe a better thing to share with you right now is, let's say, AT&T. Okay, this is a textbook example of what we try to do with our dividend portfolio. We look for former blue chip ideas that now everybody hates and no one wants to talk about, and begins to build a bottoming wedge. We will accumulate some in the wedge, and when it breaks out of that wedge, finish the position. It's a totally different process than our other strategies. You could say in our other strategies, we're looking for relative strength and we're buying relative strength. The dividend portfolio, we're looking for relative weakness that's forgotten. Okay. And so you can see here in AT&T, a lot of selling. And then here's the bottoming wedge. Okay. And this drop down here on AT&T was the stupid story about how the EPA, they're going to fine them a whole bunch of money because lead in the ground baloney. We hear that story constantly, and that bottoms the stock. So we start buying AT&T in here. It breaks out. We finish off the position. Now we have a capital gain in our position, and we're collecting a yield of over 8%. Right? We're trying to lock in a yield when the asset's getting destroyed at its highest level. Then it starts to obviously mean revert because it's not going out of business, right? And the dividend is intact. These are names on our whiteboard we've done research on. We're comfortable owning the stocks, right? Boom. So we look for distress. How about Bristol Myers? Anybody remember how, back in here, all you would hear about from Jim Cramer is how great Bristol Myers is. Bristol Myers. You guys remember that? Bristol Myers, right? Okay. The stock's been absolutely destroyed. I don't want to own it up there when it's running and Jim Cramer's telling everybody how great Bristol Myers is. I want to put it on the whiteboard when it gets its head handed to it and the yield goes up dramatically, right? And it has some stories that bottom the stock, and it makes this perfect bottoming wedge, right? And so what we're doing in here, how we buy this asset, is we're buying it in the wedge, and when it breaks out right here, we finish off our position, and now it's starting to march higher. Okay, how about Verizon? Verizon and AT&T are the same story, bottoming wedge. In fact, this broke below the wedge and reversed. That's my favorite. Breaks below the wedge and then reverses. That's when you want to hop all over it. We just did that recently in Altria. We started to accumulate in the wedge. It broke down out of the wedge, reversed. That was a classic reversal. We loaded up on it. Now it's breaking out. We have a yield of 9.5% in Altria. Okay. And so today's highlighted stock of the day has to be Pfizer. It's a classic bottoming wedge, classic downtrend. And let's go look at the weekly real quick. Oh my God. Pfizer has unwound the entire COVID insanity. So now you're back to basically investing in Pfizer as a drug company with a yield of something over 6%. Okay. During that whole process, don't forget Pfizer did a high profile takeover of Seattle Genetics. And they said at their recent Investors Day that they're ready to start to see that acquisition really perform. They think they're going to have 8 to 10 blockbuster drugs out of that acquisition, and the synergies are starting to come on. The stock is bottom. There's a bottoming wedge. We accumulate some in here, and if it breaks that downtrend, we finish off the position. We use a completely different stop strategy. We don't run out there and trade it. We give it a lot of room to wiggle as we keep collecting the yield, as long as the balance sheet is sound and we think the business is okay. So that's the highlighted stock of the day. I look forward to working with all of you on the live desk at 9:30. So there's 3 ways to interact with the Armor Investing Way. Armor Report, you guys are live right now watching this video, getting the captain's log, and then go do it yourself. And I wish you the best of luck. Armor Insiders, I'll see you at 9:30. We'll get the live stream going. We'll be doing it all day together, trading, sharing information about investments and whatnot. And of course, if you can't do it, you got your own job and you can't manage your own capital, I'm here for you. If that's the right relationship, give me a call about that. Everybody have a wonderful day trading. And remember, let me hear you guys say it, you're the smart money.